Welcome back, dear learners. Before the ad break, we spoke of liquidity. And the first financial indicator that we're going to calculate on liquidity is the current ratio, What is this current ratio? The current ratio measures the relationship between a company's current assets and current liabilities. In other words, it looks at the business's ability to pay current liabilities using its current assets. Are we able to pay our current liabilities when we look at our current assets? That is the current ratio. Remember when we prepared the statement of financial position, we're able to calculate current assets as well as current liabilities. So now we are going to use the information from the statement of financial position to see if we can calculate the current ratio. The formula, therefore, is going to be current assets as to current liabilities. Current assets as to current liabilities. Under your current assets, remember, you would have your note number 4, that is trading inventory. This is what you'd have under your current assets. You'd also have note number 5, trade and other receivables. And then you'd have note number 6, which was cash and cash equivalents. And under your current liabilities, you'd have note number 8, that is trade and other payables. So when we talk of current assets, we think of these notes. When we talk of current liabilities, we think of these notes. We're going to do some calculations. Please stay tuned. We are given information for the year 2022 as well as the year 2023. And we want to use this information to calculate the current ratio. All right? But first, we'll start with the year 2022. All right? And if we're in 2022, we want to calculate the current ratio, as I've said. We need first to get our current assets. So, for our current assets, here is our current assets. For our current assets, we will come, the first one is inventories, 26,000. So I'm going to come here and I'm going to take my 26,000 and we're going to add trade and other receivables, that is 23,000. I've added 23,000. And I'm going to add cash and cash equivalents, which is 1,000. I've added 1,000. So I have my inventories, which is note number 4. I have my trade and other receivables, which is note number 5. And I have my cash and cash equivalents, which is note number 6. Then their total will give me 50,000. 50,000. Then I say, this is S2. Now, I need my current liabilities here now. I need my current liabilities. And for my current liabilities, should I take the loan? No. This is not a current liability. This is a non-current liability. So I'll come and take my trade and other payables. That is 14,000. So here it's only 14,000. So I'll come here. And then I'll say it's going to be 50,000 as to 14,000. As to 14,000. When I am doing my financial indicators and I'm calculating a ratio, the answer has to be S to 1. S to 1. So for me to get S to 1, I'll divide my 14,000 by 14,000. That gives me 1. The answer becomes 1. Because whenever I'm dealing with a ratio, the answer has to be S to 1. Therefore, I'll come and divide my current assets by 14,000 as well. And if I say 50,000 divided by 14,000, that will give me 3.57. It therefore means my current ratio for the year 2022, my current ratio for the year 2022 is 3.57. 3.57 as to 1. 3.57 as to 1. That becomes then my current ratio for the year 2022. 3.57 as to 1. All right. Here we are then requested to calculate for 2023. All right. Remember, with analysis and interpretation, before we can comment, we need to calculate. So here I'm going to calculate for 2023. Therefore, this is now easy. Remember, I'm going to start first with my note number 4. Note number 4, trading stock, 18,000. So I have my 18,000. Then I say plus the amount for note number 5, trade and other receivables, 19,000. This is note number 5. Plus the amount for note number 6, plus cash and cash equivalents, 3,000. This is for note 6. If I add all of this, this is going to give me an amount. Punch that in your calculator. You are saying 18 plus 19 plus 3. That gives you 40,000. S2. Now I need my current liabilities. My current liabilities for the year 2023, do I touch the loan? We've already agreed that the loan is a non-current liability. So I'm going to take my 10,000. So here it has to be S to 10,000. So I'll come here, S to 10,000. My answer has to be S to 1. S to 1. Therefore, I'll divide everything by 10,000. Then I get 1. 40,000 divided by 10,000. Then I get my 4. Therefore, my current ratio for the year 2023 becomes 4 as to 1. 4 as to 1. When we are dealing with analysis and interpretation, we have to remember the 3 C's. The 3 C's, that is, we calculate, we compare, and then we comment. So you will see here we need to comment. But for us to comment, remember first we have to calculate. And we have calculated for the year 2022, it was 3.57 as to 1. And for the year 2023, it was 4 as to 1. So we have calculated. The next aspect is to compare. We are looking at 2022. What has happened when we get to 2023? You can see it has increased. And then we comment. When we comment then, we have to remember 3 aspects of commenting. The first aspect is the name of the financial indicator. The second aspect, it is the trend. Do we have an increase or a decrease? And the third aspect, it is the figures. They must be part and parcel of commenting. Let's go and comment together now. We will say the current ratio, so this is the name. The current ratio has increased. This becomes the trend from 3.57 as to 1, 3.57 as to 1 in 2022. We are talking about this one. 2, 4.1 as to 1 in 2023. Here is our 4 as to 1. There is the 4 as to 1 in 2023. Okay, I'm going to read it again one more time. The current ratio has increased from 3.57 as to 1 in 2022 to 4 as to 1 in 2023. The name, the trend, and these are your figures. Then we can say, in both 2022 and 2023, the business was able to pay its current liabilities using its current assets. In this case, the business is liquid. Dear learners, let's go for an ad break, and I'll see you shortly.